Bitcoin may have already printed its bottom, and if that's true, the next phase could be explosive. After months of corrections, fear, and bearish predictions, BTC has continued to hold key support zones while weak hands got shaken out. That's often how bottoms form: maximum fear, heavy doubt, and most people expecting lower prices. Now momentum is starting to shift. Price structure is stabilizing. Sellers look exhausted, and buyers are stepping back in. Historically, when Bitcoin survives repeated bearish pressure and refuses to break lower, can mark the start of a powerful reversal. That's why many traders believe the bottom is already in. If Bitcoin reclaims major resistance levels and volume keeps rising, the next move could become parabolic, the kind of fast upside rally that leaves sideline traders chasing green candles. And that's where bears get trapped. Many spent months calling for lower lows, waiting for crashes that never came. If BTC starts running now, they may be forced to buy back higher, adding fuel to the rally. Of course, nothing is guaranteed. Bitcoin still needs confirmation through breakouts and sustained strength, but sentiment often flips before price fully moves. So if the bottom is truly in, the slow accumulation phase may be ending, and the real party could just be starting. Sorry bears. Bitcoin's cycle pattern may still be following the same roadmap we saw in 2022, and that's why many traders are paying attention right now. Back in 2022, Bitcoin reached an all-time high. Then after the first major drop, it attempted a recovery, but instead of reclaiming new highs, it formed what traders call a lower high. That lower high happened near the 0.382 Fibonacci retracement level, which is a common technical zone where price often gets rejected during bearish or corrective markets. After that rejection in 2022, Bitcoin dropped roughly 40% before eventually finding a stronger bottom. Now fast forward to 2026. And some analysts believe we're seeing something very similar again. Bitcoin made a new all-time high, pulled back, then rallied into another lower high, once again near the 0.38 Fibonacci zone. That has many traders asking, is history about to repeat itself? If the same structure plays out, Bitcoin could see another sharp correction, with some targeting the $59,000 to $60,000 range as a possible next major support zone. Now, this doesn't guarantee a crash. Markets don't copy the past perfectly, but they often rhyme. Human psychology, profit-taking, leverage, fear, and technical resistance can create repeated patterns. That's why experienced traders don't ignore these setups. So the key question now is, will Bitcoin break above this lower high and invalidate the bearish pattern, or will it repeat the 2022 script and dump toward $60,000? Either way, this is a critical level to watch. Smart traders stay prepared for both outcomes, not emotionally attached to one direction. Bitcoin slipping from near $80,000 because oil prices are rising is a classic macro risk-off reaction. What's happening? When oil prices jump sharply, markets often worry about higher inflation, central banks keeping rates higher for longer, slower economic growth, pressure on stocks and speculative assets. That can hurt risk assets like Bitcoin in the short term. CoinDesk reported BTC fell after failing to break $80,000 while oil strength weighed on sentiment. Why oil matters to Bitcoin? Bitcoin is increasingly traded like a macro asset. That means traders watch oil, dollar strength, treasury yields, stock market sentiment, geopolitical headlines. If oil rises because of geopolitical tension or supply fears, investors often reduce risk exposure temporarily.